Good morning, traders. Welcome to the TMT Stock Market Strategy video for Monday, January 17th. Hope everybody enjoyed the long weekend here in the United States. Futures were open, markets were open around the world. We did get some downside pressure a little bit yesterday. We're getting some follow through today. But on this video, it's going to be very simple. I want to keep an eye on one index. It's going to be the Russell 2000. Why? Well, we all know that the Russell is a great gauge of risk on, risk off, right? Fear and greed. Also, Russell is a basket of 2,000 small cap companies. So you have to feel real good about buying a small cap company, right? If the markets are doing well and you think that everything is okay, what's going to happen? You're going to get a better bang for your buck with the Russell 2000. I also said that PE in the Russell 2000 is very expensive. So the index in itself as its entirety is very expensive, okay? That's not a good sign if you're basically sitting here at these highs. We've been consolidating for about 5 weeks as the markets generally do. You could see that that's really what's been happening here. You know, see this long range, 4 months of consolidation. Then we had the Trump rally. And we were consolidating here. We broke up a little bit, broke back down, but really generally in a range as well. Here is, I want to get right to it because there's a few things I wanted you to look at today. And again, take the cue, all right? Take the market direction from what the Russell does. If the Russell breaks down from this range, I'm going to start looking for short plays. If the market breaks up, meaning the Russell 2000 breaks up and can hold steadily, which we'll go over the charts in a minute, then we're going to be looking for long plays, okay? But that should be the cue coming off of the Russell 2000. Yes, the transports is our leader, deemed our leader based on our 5 indices that we follow, but you have to pay attention to the Russell because it does lead the markets in the next direction, and they usually do lead in any direction. So if the markets are right now stagnant, as you can see in all of the markets in all of the time frames, you can see the S&P, the NASDAQ, the Dow, the transports, we've all been hovering here like this, and now we're ready to explode. We also have the inauguration this Friday on January 20th for Donald Trump. And I do think that we're going to have a great week, and also I think things are going to start really picking up. The one thing you can say Donald Trump will give us is volatility, which is going to be great because over the weekend he's fighting with the Chinese. He had some terrible statements with one of the leaders in Georgia. I mean, it's just crazy. But nonetheless, that's what volatility is. I would be paying attention to what Donald Trump has to say because the markets are basically going on every cue, on every word that he mentions as he tweets things out. So anyway, here is the volatility index for the Russell, the RVX. As you can see, Bollinger Bands are extremely tight, and they're looking for direction as well. And you can see here we're in this sideways consolidation. So look for an explosive move either up, meaning that if the market goes down, volatility will increase, or vice versa, okay? Now, when we break down from the bands, we usually get a nice big rise in, right, a nice big move. Same thing here. We broke out of the band. We sold off hard as the markets move. It's inversely correlated, so just keep that in mind, guys. And if you don't have the feed, no big deal. But if you keep an eye on it, for those of you who have the stock charts and want to see how the volatility works out, this is something that I'll be looking at. And of course, I will be monitoring it and giving it to you on the videos. Next is going to be our one of my favorite charts is the IWM money flow chart. Okay, now what is happening here? This is what I'm very, very cautious about, and bringing caution to you guys is that, as you can see, we have been in this little horizontal range, right? Okay, but what's happening? All right, we have distribution, right? Money coming out of the index. All right, you can see we barely just made the 50-day moving average. We have red candles. We have distribution as the Russell still hanging in there. Okay, now Russell really got clobbered on Thursday. I mean, clobbered, if you will, but it did sell off. On balance volume, we're sitting here, but look at the chalk and money flow. Look at money flow. Money flow's coming out. Here's the force based on the increase of a buy and sell pressure. We have no pressure at all, meaning that markets are basically, money's coming out of the market, and not with force, but you could see money is flowing out of the market, making lower lows and lower highs, and that's not a good sign. Okay, so that's another thing to be careful. If we start to break down, I think the IWM will issue a sell signal for the equity markets itself. Okay, here's the Russell 2000, and this is the future. Okay, so what I want you to pay attention to, write this down. Here are going to be your key points. It's going to be this high, this swing high here at 1392, and this swing low here at 1353. Those are your 2 points from this horizontal channel. If we break down, now one day doesn't make a trend, so if we break down today and we close, I'd like to see a couple of consecutive closes below this range, and then take that swing high, and then for lower prices, and hopefully we would get something like this, bear flags, where we can get short at these areas. Okay, but remember, guys, nothing just goes straight down. But with the algos, it's possible that markets can just start to sell off, and everybody want to maybe start taking profits from this. And these are longer term picture, guys. Not the day traders, but for those who are still holding up here, may want to say, you know what, inauguration time. And remember, whatever he anticipated that he's going to do is going to take at least a year to go into play. Okay, bills have to get passed. I mean, and the first 2 or 3 months he's just getting settled in, so nothing's going to happen here. Okay, so this is something that's crazy that this even happened. All right, but nonetheless, this is the markets that we're driven in today. Next and last is going to be the IWM ETF, and this is a chart you've seen many times. You can see our MACD and RSI rolling over, but this is common. Don't get fooled. Oh wow, this is negative. Yeah, it does look a little negative. However, but when we go sideways like this, it happens. It unwinds the overbought readings. Okay, that's the positive part. But remember, this is what I want you to keep an eye on: 135, 139. We break 135 on a closing basis, and I like to get us below the proprietary price channels, and then we start looking for some short trades, and that would issue a sell trigger. Excuse me. The TMT trading model right now is just about to trigger short. I think today's push lower, if we can stay low, will probably issue a sell signal at these areas. Okay, so just use caution. I don't think I would be looking to start buying dips, not this week at least. Let the markets digest. If we can get, hey, look, if we can, the markets move down 5, 6, 7% this week, next week, and we can stabilize, then you might want to consider buying a dip. But don't buy a dip. When you do buy the dip, that dip is probably not meant to be bought. The rally's supposed to be sold. Okay. Remember, we've been buying dips for 7 years. Just use caution and make sure you use your stops. Watch that Russell, guys. It's going to be very, very important today and this week. Have a great day. Be careful. We'll see you tomorrow.